Yes, we're live. Check, check, test 1, 2. Okay, that's supposed to. I'm guessing that's working. Hopefully that's working. Let me share it. Where is the share at? Oh. How do I do this? Where's the share? Oh, there it is. To me. Can't type worth a crap. Alright, where are we? Here we go. This random crypto guy having his second cup of coffee. Today is hazelnut with a little bit of peanut butter mixed in there. I'm a peanut butter addict. I go through a couple jars a week. So let's get right to it. Let's start with the Dixie, the dollar index. I'm going to zoom in here a little bit. See that we had the pullback that I was expecting. It's starting to materialize, and just a pretty strong demand level right here. This is a daily demand level over multiple years, and this is the weekly chart. So I expect this to maybe bounce around here a little bit, quite like what it's done in the past, being how there isn't a lot of actual money printing going on, just threats of money printing. So I expect this to just bounce around a little bit, maybe even reverse and come up and bust through these supply levels and go all the way up to 92.54. So that's a possibility. So, but just to keep that in mind. And now this isn't an exact inverse of all the other markets, but it basically gives the steering winds of what the markets are going to do. As you'll see, like Bitcoin actually went down with the Dixie, but that was more because of FUD and because of profit taking and people moving their profits into the altcoin market. And you'll see all that upcoming shortly as to why that happened. And then you'll see that the other markets actually did do the inverse of it. So being that the Bitcoin market is so small compared to other markets, it can kind of decouple for a little while and move opposite of what it should do as far as what the Dixie is doing. When we talk about the inverse of when any market is measured up against the dollar. So let's moving on to Bitcoin. This is a 4-hour chart. We're going to expand out to the weekly. Hopefully you can see this. This is a little. I got all these things. Let's get rid of these here real quick. There we go. I drew these in are these zones that I'm looking at, that where I expect a bounce if it breaks through there. You know, that's another thing, is people think that they have to be, this has to happen. That's not the case. Price will always dictate what things are happening in the here and now. As we project out into the future, this will change. But in the meantime, this is where things stand right now. It's always a dynamic puzzle to be put in motion, and well, I am not talking right lately. Maybe I didn't have enough coffee yet. But as you can see on a weekly chart, we're still heading downward, but our main demand level, this is the one that I was worried about, the top one got ground out with the FUD, with what happened with they talked about the double spin. I think it was Cointelegraph or one of those crypto rags used the word double spend, and that's not what happened. Essentially, what happened was that there was a tie for the block. That when the miners, they compete with each other and they try to solve this complex Sudoku puzzle. And once in a while, there's a tie where two miners will finish relatively at the same time. And so they have to wait for the next block to form, and then what gets decided is who actually won. I think it has something to do with fees. I'm not exactly sure how the tiebreaker is figured out. But once you get to the next block, that's when they figure out who actually won the previous block, and then that block is awarded the coins and the fees. And so that's in a nutshell. That's how it works. It's a lot more complicated than that, I'm sure. But basically, that's what happened. Is that two miners tied to find the block. And then at the same time, BitMEX didn't wait for the next block for confirmation. That's why it takes so long for these transactions to go through, because of these ties that happen on occasion. So you wait at least 3 confirmations, preferably 6. Most people wait for 6, but I guess BitMEX tries to speed things up. And that's the reason why you have to wait, is because of in the instance of a tie. So that top demand level got ground out, but the bottom one still, it held. And then we look a little closer, a little deeper here at the 4-hour. You can see this black box here. That's a new demand zone nested inside the old one that occurred back here. Let me zoom back out. It occurred back here. So the first demand zone, the upper one, was right here, where this wick was, and then it was stacked on top of this one here, where this wick occurred. So you had a lot of demand zone. That's what creates a base where there's a lot of demand there. There's a lot of people waiting. And if you watch the Sam Seiden videos, they have a really good explanation as to why this occurs. And I'll get to that in a little while as well. I don't want to get too deep into that. But we have a new one that formed inside this old one. So now we have a nested one as opposed to stacked, which nested isn't as weak or isn't as strong as a stacked one, but it's still fairly strong. But as you can see, that we're still getting lower highs here in the 4-hour. So the weakness is still there, and so a lot of profit taking has taken place here, and has moved over into the altcoin market. And so what I've learned in this market is that you don't want to chase it where it's going. you want to go where it's quiet and where nobody's looking and start accumulating. And so honestly, this right now would be a really good time to start accumulating Bitcoin, because even if this breaks, we got another base set up down here at 24, and then we can accumulate, and you can accumulate more here. It's not financial advice, I'm not a financial advisor, but this is just what I'm doing. What I've learned is that you end up getting burned if you go and try to chase price as it moves, and I'm going to show that as well today, how I look for quiet markets, and so that I'm not chasing price and I'm finding areas of accumulation and then accumulating there. So it's actually kind of quiet here. The volatility has died down a little bit. I think the slope here is starting to change, so you're starting to see momentum. Let's draw a trend line here. I know they hate trend lines, but when the trend line breaks, that means that we have a change in momentum. So it's starting to slowly turn up, and we're starting to look at some possible upward movement, but not really that fast, because we got this area here, right here. This is our pivot bounce liquid area, whatever you want to call it. Some people call it pivot, some people call it liquid zone, supply zone. I call it liquid supply. There's a million different names for it, but that's where, you know, I expect a little bit of a pushback, where price bounced around here, was in equilibrium, and then took off here. Means that there's maybe some sells up here. Now they might have got triggered here and it might just drift right through it. That's a possibility. It got front run a little bit, but I think it'll bounce down a little bit from here before it takes off again. So I'm going to start quietly accumulating here while everybody else is all excited about their alt season. I'm not against alt season, but I've just found for myself, when I start chasing where the price is going, and it's like hockey. You go where the puck is going, not where it is. And so everything's going right here right now. This is where the smart money is accumulating. Let's move on to Ethereum, and as you can see, we're still haven't quite busted through. Come on, I want to move. It's not moving. What's going on here? Must be expanded all the way out. Look at that. Okay, so we're into this supply area, and it's moved up in here. It's doing pretty well. I mean, it's actually. I'll show you in the cross, the ETH cross, where how you can tell where alt season is actually beginning. This is basically an index of all the different altcoins, and it flows into a cycle where it goes first into Ethereum, and then it goes into the large cap, and then the medium cap, and then finally the small cap, where because they can move monsters here. But you got to get in there when it's in the accumulation phase, not when it's actually doing what it's doing right now, where it's actually moving. It's too late. And because I'm still accumulating Bitcoin, because I'm not happy with my position, I had to pull out of my position last week. I don't remember, did I talk about that? I didn't talk about that. I'm gonna go back to that in the noob section. So it's making a good move here into the daily supply zone. Got a little bit of rejection off of there, but moving right along. You know, it's got a lot of strength behind it, a lot of oomph behind it, and as the profit taking from Bitcoin moving into the alts. So Nasdaq also moving to a new all-time high, moving up. As I said, it's just the inverse of the dollar index, the Dixie. So it's going to continue to move up. Now it's not the perfect correlated inverse. I try to, I think that there might be some people out there that think, oh, it's a perfect correlation, and it's not. It's just the strongest headwind. It's the right now as it goes down, it's the dirtiest shirt in the laundry hamper, and then when it's going up, it's the cleanest shirt in the dirty laundry hamper. So right now it's dropping and being the dirtiest out of all the different, because you have to remember it's a basket of different currencies that it's going up against. It's going up against the euro, which is the majority of it, the Swiss franc, the yen, and something else. I think it's I can't remember, but it's all those. It's just measuring how it stacks up against that, and the euro being the heaviest of all the different ones. So it basically is the inverse of the euro USD, but with a slight edge, because it also adds the yen and the Swiss franc. So new all-time highs for the NASDAQ. Good job, guys. Gold just kind of fiddle farting around, not doing much anything, kind of flagging out here. So it's looking like more and more like accumulation. So it's not necessarily a bad thing. I'm not against gold. I just don't think it's the fastest horse in the race right now. But if you are a little bit more risk averse, gold might be a good substitute for Bitcoin. They both move in a similar fashion because they're both considered property or commodities. So but because Bitcoin is an emerging asset, it's much more volatile. And, gold has its moments too, but it's basically a hedge against the inflation, that it won't go down as much as Bitcoin if Bitcoin does, if everything decides to tank. Gold tends to hold its value more than Bitcoin, so that's just something to keep in mind. And if you're more risk averse, or you want to add that to your portfolio, I'm not against gold at all. I just I know Peter Schiff is against Bitcoin, but I don't. It's a silly argument. So moving on with silver, same thing, just kind of flagging out, looking a little bit distributive, but just little upward higher lows. And we got one higher high. Starting to look like accumulation again. So just something to keep an eye on. And like I said, I'm more of a long-term strategy trader. That's why I look for areas of accumulation. And so I'm not set up to buy silver. I am set up, I can buy some gold if I want, but I'm not set up to buy silver at this time. So if it's something that you want to keep in mind, I'm just looking for areas of accumulation where people aren't looking right now. Oil's starting to flag out too a little bit. Might see a little dip here as the dollar continues to decline. This might not be a bad opportunity looking at the long term. At the longer term, I would wait for a dip before I would look at oil again, and then make sure all the fundamentals line up in there. I'm not as good with commodities as I am with like Bitcoin and gold and silver and currencies, but it's something that has interested me, particularly the agricultural commodities. Not so much oil. Oil to me is just, it's too confusing. Agriculture makes a little more sense to me. something that as my portfolio grows, I will start adding commodities into it. Particularly, like I said, agricultural ones are of particular interest to me. And then here's the ETH Bitcoin. Let's zoom in here a little bit. This is the daily chart. You can see that we developed a nice demand zone here. So that's a nice base right there. Setting up. See how fast it moved away? 3 days and wham. So that's a pretty good setup right there, where it's going to be very difficult for price to drop through that. And as you can see, we've gone through a series of higher lows and higher highs, and we got to work through this supply zone right here. Now this isn't probably a highly traded asset, so I don't know. Trend is probably more important than supply and demand in this, because I don't think that there's a whole lot of volume going on in here other than people swapping it out. But I don't think people actually sit down and trade this all that much. I think that they just cash out into ETH to go into alts or to hold ETH, or but I don't think it's that big of a deal as far as trading. But I could be wrong. I mean, it did bounce off of it here, right in here. So, but I just don't think the volume's there. It's like trading Tesla sugar or something like that. It's not a big thing, but it is a good indicator as to what direction the general market is heading, whether it's altcoin season or not. It's something that I've watched and I looked at when I was trying to figure out how to best optimize my strategy in the beginning when I was with BlockFi, and whether I would collect my interest in ETH or Bitcoin or dollars. But I didn't really see anything consistent and then I could easily flip, and then I found out how expensive trading is at BlockFi, so I got away from that. But it's the monthly chart. It's got a nice monthly candle here, no question about that. Whether it gets to like it was back in 2017, it still remains to be seen. It's possible, but I would say that that's probably more likely to happen with coins like Link and Dot, some of the high cap, low cost coins down, where it's 10, 20 bucks. I think that that's more than likely that you're going to see moves like that with Link and Dot, and Theta, I think, is another one. Monero taking another dump, bouncing off of Turncoat, but looks like it's going to flag out here just like Bitcoin. It might be a time to accumulate Monero. That is a good Turncoat support. It's pretty solid, and as long as the dollar keeps continuing to be devalued, the volatility I'd like to see the volatility die down a little bit more before I start accumulating anything. I don't have a position in this right now. It's just something that I keep an eye on. It's been an interest to me because of privacy issues, but it does have its struggles because it is a private coin. The government doesn't like it. Litecoin, pretty much the same thing. It's bouncing off a Turncoat. Zoom in a little bit. Bouncing off this demand level here. And just moving on up. It's following whatever Bitcoin's doing right now. XRP, dead in the water. I'll zoom in. I kind of just flew by it last time, but you can see. I mean, if you can find a place to buy it, looking at it around, anything under 20 cents, and then wait for it to go up to 30 and then get rid of it, dump it. That's about the only thing this coin is really good for at this point, would be a pump and dump. Those of you guys that are waiting for it to rocket up to $10 or whatever, I don't know. It's still a possibility with the new administration. I guess the guy that's part of the OCC, he was formerly somebody from XRP or something. It's not who you know, it's who you blow. You know what they say. And but because it's being considered a security, it doesn't mean that it's not going to have value and it's not going to be used. It's just whether they're going to infiltrate the central banks to be the remittance currency, or be. There's some things I do like about it, but there's some things that I don't. But I'm sure that the things that I don't like about it, the government does like about it. So it's just something to keep an eye on. Definitely not. I'm libertarian at heart and an anarchist, but I'm also a realist, and most people are too dumb to be self-governing, so they need some daddy figure to spank them when they do wrong. They live, they're guided by fear and not by logic or reason. They're more guided by fear, and so and punishment, as opposed to self-satisfaction and reward. And they're just living at a basic instinct animal level. I know, because I used to live like that, and that's one of the phases you go through when you become enlightened and realize. But most people never reach that level. Most people just stay at the base level, being hypnotized by the TV and being compulsive consumers. So, but I digress. Moving on to Tesla. It's flagging out here. It looks like it might start accumulating. Looks like bullish reaccumulation might not be a bad place to start accumulating. Not something that I own, just something that I like to watch, because just fascinating how it's just gone fucking crazy ballistic. I wish I had followed it sooner, but que sera, sera. I got Bitcoin, so I got that one right. Litecoin Bitcoin pair is, let's zoom in, I kind of blew by this last week too. So it's just kind of chopping around, not doing much of anything. So it's not outpacing Bitcoin, but it's not lagging behind it either. It's just kind of dragging along. EURUSD, as I said, it's basically the inverse of the Dixie. And I follow this because I still like trading. Once in a while I like going on and doing my Sydney salmon scalps. I wish I didn't had the time to do that again. I actually did pretty well with that. And I'm even as I matured as a trader, I've even gotten a little bit better at it, and recognizing when to stay in and when to not jump in the pool. Even recognizing even more probability than before. As I've said in the past, when I stay focused on one or two or three assets, I do extremely well. But if I spread everything out, then I lose focus, and I don't do as well. So, Dash on the weekly, what's going on here? Just pretty much the same, kind of just bebopping, moping around. That's XRP, already did this, so we can close that. Alright, moving on. Let's go to... Okay. what I want to go over is how to look for accumulation. And did this on TradingView. I'm still learning about TradingView and developing some ideas. And what I've done is I set this up. This is the Bollinger Band width indicator. It basically, the Bollinger Bands, those are the bands that open up when price starts to move up or down, and then when price gets quiet and just starts into an accumulation phase or even a distributive phase, it'll go back down and squeeze together. And this is what it does. What I'm doing is I'm looking for the average. Now this one doesn't show it very well. Let's go to Bitcoin. This will show it a little bit better. So what I'm doing is I'm looking for when the green line is below the blue line. That's going to tell me that's a possibility of an accumulation phase. Now it could also be a distribution phase too. So you have to look at where it's at in its cycle to determine that. And right here is, this is looking like right here, when it dropped down below here, you can see this was around that dull period where it was like 17 for like seemed forever. This is a daily chart. This would have been the time to start accumulating, really upping your DCA. So, and then when it gets above this line, you lower your DCA because now it's starting to move, it's starting to trend upward. Now this doesn't mean, this is not the trend, this is just the volatility. How whether it's moving up or down. This is going to go up whether it's moving up or down. So it's just telling us the volatility. And then you can see that it moved back down, and now starting to quiet down again. So it's leveling off. So that's when you want to start accumulating and really upping your DCA. So I expect this to move up again fairly soon. Probably, well, not like right away soon. What I expect happening is that it takes a while for institutions to get moving. They have, a lot of legal hurdles to jump through, and they have to let people know, let shareholders know that they're going to add Bitcoin to their balance sheet, like what MicroStrategies has done with Michael Saylor. And Michael Saylor can move a little bit faster because it's a smaller company, and he's more of what he says goes, because he's both the CEO. He holds like two offices in his company. So he's got a lot of say as to what goes on, but he still has shareholders that he has to talk to, SEC filings and everything else, and all that takes a lot of time, a lot of effort, a lot of lawyers. And so what he's done is that he's open sourced all his information out to the public, to these corporations. Said, this is what I did, you take a look at it and decide. So you don't have to spend the money to do it. He's been generous enough to do that because he's smart. He knows that the return that he's going to get on that is going to be astronomical, because people are going to snatch up that, and when they realize what Bitcoin is, they're gonna pile in, and it's just going to continue to. So I suspect at the end of this quarter, you're going to see more announcements. That's the end of March. You're going to see more announcements of more people adding to their balance sheets, and adding Bitcoin to their balance sheets. And then it's probably really going to take off in the second quarter, and that's it in June. That's when I expect a big parabolic run. That's when it's really going to start taking off. So right now would be a good time to accumulate. And while everybody else is, chasing fiat and looking for those big returns, I'm looking at this point now. just to stack Bitcoin. I'm not worried about the fiat price anymore, because I'm, as a longer term investor, when you're doing DCA, you want to up when the market's quiet, or even when it's dropping, as long as there's not some fundamental change in the market, like a coronavirus dump or something like that, or some North Korea decides to throw a nuke at us or something like that, some deep fundamental change. I don't see Bitcoin going anywhere, and going down anywhere below 20, definitely. But it looks like it's going to hold its own for now. So this is what I look for, is when the Bollinger Bands collapse. Let's go ahead. Let me show you. There we go. Let's put a Bollinger Band up here, so you get a better visualization of what I'm looking at. Let's just look at I'll just throw the Bollinger Bands up there. And, well, how'd that happen? We don't want that. We want this. But you can see that when price starts trending, the Bollinger Bands start expanding. And so the width, this is the Bollinger Band width, gets wider and wider and wider, wider. And then price drops down to the center line. We cross the center line, and now it quieted down, and then the Bollinger Bands are collapsing. So this is looking like it more and more like reaccumulate. This was distribution here. There's people taking profits, and now after this big dump here, looks like we're starting to get into some quiet accumulation. It's a little early yet, but based upon the supply and demand charts I showed earlier, it looks like it might start being reaccumulation at this point. And now that the Bollinger Bands are quiet, so this is what I'm looking for. Is it below the blue line, or is it above? If it's above, we want to lower our DCA. If it's below, we raise our DCA. It's really that simple, but it's a little more complex than that, because you also have to take into account the overall trend, the weekly trend. The weekly trend is still up, even though we got some down candles, but they're still green on Heiken-Aishi candles on the weekly. These are my Heiken-Aishis. They're still green. I haven't hit a red candle yet. This one's pretty close, so it's got to drop all the way down and break this level before it turns red. So actually, it only has to break 30, and then it'll turn red. And we might have some issues at that point if it drops below 30, and that's right in that demand level. So just something to keep in mind. Let's look at some of these. Let's look at ETH on the chart. See, this is it. Ooh, this is the weekly. I want the daily. I like the daily when I look at this. Actually, it's starting to looking back to reaccumulate. Interesting. We are in reaccumulation. So not bad, but let's see how tight the Bollinger Bands have been for forever, and then expanded out. So, like I said, this is an average. So it's also, you can take a look, will it get this quiet again way down here, where it's only 0.23 as opposed to, well, oh, okay. Well, we'll see. It's down in there. It's definitely pulling back in. It's interesting. Here's DOT. DOT's taken off. You can see this is when you should have been accumulating is here, right in here, and then bam, then you back off and let it run. So here's link, same thing. See how its bands are nice and tight, and bam, takes off. Let's look at Tezos. What's Tezos done? Tezos hasn't shown. I mean, we're out of the accumulation. You only had a really short phase there. It seems to go in like spurts. Let's back out a little bit. Let's take a look at it a little deeper. Yeah, well, we had some accumulation here after this big dump. This was reaccumulation here. And then boom, took off, then down again. False start. It happens, and then now it's trying to make its way. Tesla's just, I don't know, they got shitty marketing. Well, yippee-ki-yo, yay. See, after this big sell-off here, boom, took off. So they don't have a lot of history here, so. And then here was reaccumulation. And it's trying to take off. It's off a lot like Tezos, a lot of false starts. No real big moves. About Dot. Oh, I already did Dot. Uni. This is the one I'm actually in right here. Actually late to the party on this. I actually jumped late. I jumped in on this candle, I think. And was it that candle? Or was it that I got in? Yeah, I think it was. Yeah, I was late. I jumped in on this candle. I jumped in when it started. I think it was this candle. No, it was earlier than that. I think it was actually this candle. Okay, so I'm in the accumulation. There's a nice accumulation area. Then bam, takes off. Not a false start. Good. So anchor still kind of. This look more like distribution. They had some problems with the breach. With they were part of that with Kai and a few others a few months back. With they got broken. That exchange got broken into. I had some money in there, a small amount in that exchange. I'm not gonna name it, but yeah, I had money in Anchor. Actually, I pulled out when I broke even and pulled all my money out except for Link, and I think I broke even in Link, and now I had and I yeah, because they were holding on to my Link because they wouldn't let me take it off the exchange. They had it all locked up until they got their bugs fixed. So needless to say, I don't use that exchange anymore. I might use it from time to time if I can get into margin trading, day trading with margin trading, but at this time I just don't have the time to do that. Here's VET. Here's another one. It's going back into the Bollinger Bands are squeezing back together. Kind of looking like a false start too, though. But showing some pretty good signs. Might be a play opportunity here to buy again with VET. This MicroStrategy, not really enough information on this chart to show. I'm just now beginning to see a moving average, and Bollinger Bands are crossing down underneath it. So just something to watch. Maybe it might be a time to might start accumulating that. So there's that. There's the let's see. Hang on. Let's see if Here's the chat right here. I guess nobody showed up yet, which is fine. So you're a newbie. You want to know what's going on. I think this is the best place to start, is BlockFi. The reason why is because there's not a lot of coins. You only have 3 cryptocurrencies. You have Bitcoin, Litecoin, and Ethereum, and then you have Paxos Gold, and then a bunch of stable coins to the US dollar, whether it's the Gemini or the Circle USDC or Pax Dollar, or and then I think if you're in a foreign country, the Tether is available as well. It's not available in the United States, and one of the reasons why I want to get out of the United States is because I can't trade the way I want to trade. The land of the free, the home of the brave. We have some of the strictest guidelines and trading rules. It's just ridiculous. But anyway, so this is a good place to start. So you won't get confused by 18 bazillion coins, and the interface is very easy to use. It's easy. You can use Bankwire crypto, a stable coin. You can use Plaid and Wire to link your bank account. So that you can move money back and forth from your bank account directly in, and then buy your crypto there. It's expensive to trade here, but it's a good place. If the market does go to shit, I keep a lot of my Bitcoin here. Like I said, it's not the best place, but if I need to flip it quickly, if the market goes to shit, something happens, fundamentally driven, it's really bad for Bitcoin or the market in general. The dollar starts, spiking. I can flip it into dollars, or if gold starts, maybe gold will be the safer place. I can flip it into gold very quickly. So, highly recommend it. I'll put a link down, and then as you move up, the downside of this, before I move on, is that you do not own your keys, and until you're comfortable learning about wallets and learning about how to transfer safely and effectively. Basically, they work as a custodian. If you've ever owned gold and had it in a deposit box outside of the United States, you have custodians that hold your gold for you, as opposed to keeping it in a safe. And the positive part is that you can earn interest here, and you can, one of the things that you can do here is that instead of owning gold, you own shares of gold using Pax Gold. Basically, that's how it works, and then you collect interest on that as well. So you're making money instead of paying them money to take custody of your cryptocurrency until you're comfortable learning about wallets and how to manage wallets. So it's way better, because you're earning the interest while you're learning. So you can't beat that. And then once you learn, and you can learn to transfer, this is another one that, once again, Celsius, you don't hold the keys, but there's more coins here, better interest. It compounds weekly instead of monthly. It's you get a little bit more bang for your buck. And I have some money set in here as well. And this is if you're a little more advanced, but you're still unsure about holding your own keys, or you don't care about holding your own keys, and there's no reason to have your keys if if you're willing to put up with the risk, the third-party risk of loaning out your cryptocurrencies and these companies holding your keys, to me, it's no different than having a credit union. I trust my money to a credit union. That I have direct deposit to my credit union, and I trust them to hold my money and pay the bills. It's basically works like that. And then you just get a lot more money involved, and then they have a weekly AMA sessions that I'm really starting to enjoy. I was a little leery about them at first, but I'm a lot more comfortable with them. One of the things that you do have to know is that there is a 24-hour hold before you can transfer out so that they can confirm the wallet, and then once that confirmation happens, then you can transfer it out pretty much instantaneously. So that's why you want to I recommend going to BlockFi first, because it's 24 hours no matter what, or next business day no matter what. But with Celsius, you can actually, once they confirm that is a whitelisted wallet, which means that it's a trusted wallet, a wallet that you trust, then you can set up different accounts. And what I'm doing is I'm setting up this to go to Kraken. Kraken is the cheapest place. This is the cheapest place to trade that I've found so far. They have the lowest fees for us noobs. They can, and then there's several hundred coins, and then they can even trade like Forex on here, I think. There's some small amounts of leverage for United States citizens. Like I said, it's a little more complex, so you build your way up. Like I said, you start here, get comfortable with wallets, then move to here, then set up your exchange into Kraken. It's a good progression in learning how to manage your cryptocurrencies. I've done a lot of trial error, a lot of experimentation on this, and this, I believe, is the best method. Now, I also have Coinbase. I also use Coinbase. Now, I know Coinbase sucks for trading. Oh, up to almost 33. Cool. Coinbase really sucks at trading, but one of the things I like about Coinbase is I can quickly buy dips, because my ACH, my bank account can directly fund into this, so I can immediately pull my money out of my fiat currency out and then put it onto actually Coinbase Pro. See, I can go to Coinbase pro.coinbase. Oops, I don't want that. But anyway, I didn't want to put it up there because I was logged in. I didn't want it to be logged in. I can go to Coinbase Pro and immediately draw my funds out of my bank account, my fiat, and then buy with limit orders on Coinbase Pro and buy dips. That's what I like about having that utility. It's the fastest way that I've found to convert my fiat and convert it in a way that's relatively cheap and fast. the cheapest way is to do what I do here with Kraken, but it's not the fastest. And then one more, I forgot to do this one, is crypto.com. Now what I do here is that you can set up direct deposit from your paycheck into crypto.com. I don't recommend this for noobs. Like I said, if you're brand new, start at BlockFi and work your way up into Celsius. For crypto.com, I have a small amount that I put in every week, and then I just buy Bitcoin with it. And then when I have enough, I transfer it over to one of my interest-bearing accounts, whether it's Celsius or crypto or BlockFi. So for working schlubs, I think like I said, I've experimented. I've actually, I've lost a lot of money doing experimentation on things. I've lost, a few $1,000s, but I've also made tens of thousands of dollars. So it all washes out in the end. That's part of the cost of doing business and trading, is that you're not always going to win. It's one of the things that you have to come to terms with, which now I'm going to get into that here in a second. I know I'm not the best talker. I ramble a bit. I've got a few things on my mind, and I want to just get them all out in one video, so it's all in one shebang. And particularly, this is set for newbies. So let's go ahead and close these up. So, but going back, let's review before we go. Brand newbie, start at BlockFi. Please, just do it. Don't try to jump on, PP balls. There's actual coin called PP balls. PP is stored in the balls. Nice. These small market cap coins, and I wouldn't even worry about like the medium cap coins like Link and Dot. Just get yourself familiar with the particularly Ethereum and Bitcoin, and then you can expand out from here. And this is the easiest, safest place to do that, is to start at BlockFi, and then maybe get a Coinbase account would be second best. But to develop that fast ability to buy the dips, but like I said, that's a little bit more advanced. If you're just looking to dollar cost average in and get your feet wet, this is the best place to start. This is probably the second best. It's probably, if I lived outside the United States, I would say this is the best, but it's definitely. But I'm inside the United States and they suck. So Celsius definitely is. If I could manage to get out of the United States, I might transfer all my money over here. Not sure yet. As far as cheapest exchange, Kraken, definitely the cheapest, easiest to. I do know of one that's cheaper, but I don't like it. It's way too complicated. It's like a frickin' spaceship. I could handle it, and it was tough, but I could navigate it. But it's very easy to make a mistake and hit 10x leverage and blow your account up. So you got to be careful with something like that. Kraken is a lot. They have 3 levels where it's like super easy, medium, and then expert, and then they have a pro on top of that. So they separate it, segregate it out depending upon your skill level as a trader. Crypto.com, it's another one I would possibly look at if I was outside the United States. I don't use it for anything other than to buy Bitcoin and DCA with direct deposit. That's the only thing I use it for right now. If I was outside the United States, maybe it'd be something better, but Celsius actually is a better company, I've found, than Crypto.com as far as features and benefits, what they have. So that's enough of that. Let's close these out. And don't forget Coinbase, pro.coinbase. It's got this little emblem right here for the being able to set up your ACH. It's automatic clearinghouse is what ACH stands for. It allows you to immediately trade on Coinbase Pro and set up limit orders from fiat. It's the quickest way. Not the cheapest, but the quickest. So moving on, I wanted to go over, let's say, before you ever start any of this, please read this book. Where's it at? I didn't set up for this. You know, at the very least, follow. Where's the video? The one that I like. Baby steps. Let's look at that. This one right here. This one's written by a robot. Or read by a robot. Well, no, this one's actual. I have this one on my Audible. It's Dave actually reads it himself, so you get some of the emotional nuance behind it. And one of the things that the mistake I kept making was somehow I got it in my head, and I got this from Rich Dad, Poor Dad. You know, that savers are losers and all this, bullshit nonsense. So my dumb head took that as, oh, people are driven by fear and a fear of poverty, and if I put myself in debt, then I put myself in a position of constant desperation to force me to come up with ideas on how to get out of that situation. And so I ran with that idea for a long time. I was a part of different groups and stuff, and they all were like, savers are losers, savers are losers. All of them, they were, it was when, it was probably a few years after Rich Dad, Poor Dad came out. And, and that was the mind mentality of the early 2000s. Savers are losers, and, it's a 4-hour work week. And so it just didn't jive with me. I couldn't, I didn't understand it. And when I read this book, and this was actually came out earlier, I believe it came out in the early 90s. This is when things started to turn around for me. I took his advice to heart and really started saving. Savers aren't losers. It's just a statistical anomaly. I'll be right back. All right, sorry about that. Um, when savers aren't losers. The reason that Robert Kiyosaki talked about savers being losers is because of inflation. But what he should be saying is consumers are losers. Because I would come up with ideas like, well, if I make enough money, I'll buy one of the things I always wanted was a personal watercraft, one of those basically jet skis, motorcycles on water. And if I make enough money to buy that, that's something's going to drive and motivate me. And what I found is that those things didn't work. I ended up getting in debt, and just whether I got in debt because of consumption, or even if I got in debt because I wanted to start a business. I started a few, brick and mortar businesses and side hustles and stuff, and none of them ever came out. Part of it is because I just couldn't attract the right people to work with me, and the other part is that that I had the cart before the horse, that I wasn't saving. And if you don't get rid of that mentality of consumerism, that that's not what drives these people. It's just the ability to collect money. It's not yachts, mansions, and things like that. You have to get your money to work for you. And when that started to click, and it was my own money, it wasn't other people's money. That was another fallacy, that I have to take care of my own house first before then more can be given to me, and I can handle more responsibility. And so I have to have that solid base. And so I'm still, I just really solidly finished baby step 3 at this point. And I didn't do it the way he would suggest doing it, but because of my background as a trader, I was able to accomplish in 12 months what would probably take some people 3 years. And so now my next step is to probably look for, well, actually I want to move out of the country before I actually take on finding a residence and building up that. But in the meantime, I'm saving up for that, and I'm allowing my money to snowball. I got rid of all my debt, and now I'm letting my income snowball into assets that make me money, and passive income in particular. I'm probably either too lazy, or I don't have the social skill set to be any type of business owner. I'm not sure whether it's because I'm lazy or because I don't have the social skills to do it, but probably a combination of the both. But so I had to look at what my strengths are, and that's to be able to stay focused and to be able to save. I've always been a saver, and and that was, like I said, I got screwed up in that mentality in Robert Kiyosaki, other people's money and savers are losers, and when I threw that all away and picked up this book, that's when it started to change for me. Maybe you might get lucky as a part, with other people's money and doing the right things. Maybe you have the better social skills than me, and that you can be more of a business owner and entrepreneur, and take those high level risks to achieve the benefits of that. Personally, it never worked for me, and this did. So I highly recommend it, even if you are people person and then you have done well in the past with other people's money, I still recommend reading this book because I think as far as investment advice, but as far as debt reduction, saving for a rainy day, insurance and taxes, this book you got to read it. You got to read it. It'll open your eyes to a lot of things that you might not have seen. But as far as investment advice, even with real estate, he was an old real estate person. I don't think he's that good at real estate. I think there's better people out there, but for debt reduction, without a proper beginning, there can be no hope for a right ending. And I was still stuck in consumerism, and that was one of the reasons why I kept failing with other people's money, because I was too busy thinking about being, getting the things that I wanted, these consumer products that I wanted. And now I've reached a point after reading this where, if I want something like that, I can rent it out. I can go out. I have the money. I can go out and rent a jet ski, and then I don't have all the pain in the ass bullshit of registration and trailers and maintenance and all that. I can just, because how many times I can realistically go out and go out and run on my jet ski on the weekends. I mean, for some people that's what they do. But if they lose that income, then then what? And so that's what I've come to the conclusion, and I think that eventually more and more people will come to that conclusion, and that that stuff will get tokenized, and that'll reduce consumption and reduce the amount of resources on the planet, and you can just go and rent using tokens back and forth. And I have my jet ski token, and so I can go out, give the guy my jet ski token, and then go out for a jet ski for a day. That's the future that I see. That some guy, he owns a business that he rents out jet skis, and he takes it. It's all tokenized, and whether it's jet skis or whether it's the hard durable goods, consumption might be a little bit different. But I see for hard durable goods, even real estate, tokenization of real estate, tokenization of, I see it becoming more, we become more nomadic and being able to, but this is like years down the road. I mean, we're closer to horse and buggy than we are to space travel. So I have to remember that there's still a lot of old school thought out there. But definitely recommend this book if you can get the free version on the robot voice reads it, or you can buy it. Definitely, without a proper beginning, there can be no hope for a right ending. And this is where you should start. And then you can develop the mentality of having not a consumer outlook, but more as a renter. It's just silly to have mansions with 15 bathrooms. That's insane to me. That I look at it. I mean, when I used to be in Amway, and the group I was in, they would put these vision boards up. We talk about how owning mansions and stuff like that, and I'm like, I would buy a hotel and live in the penthouse and rent out the bottom half. That's what I would do. And then I would rent it out to all the people that were underneath me in my pyramid, and develop the seminars and stuff, and then collect the money on the rental for the hotel. And that was how my mind worked. I don't know how they wanted a house with 15 bathrooms, and I'm like, why would you want a house with 15 bathrooms? It'd take you, if you take a shit every day, it would take you 2 weeks to shit in every bathroom. That doesn't make any sense to me. It's a waste and overconsumption, and one of the reasons why the planet is dying. Well, we're we're killing ourselves. We're not. The planet's not dying. We're gonna die if we keep doing what we're doing. So, anyway, moving on. Where was I? Oh, yeah. So, after that, let's move on to, let's see, what would it be next? Baby pips. So, you want to start learning investing. This is probably the best place to start. Go to the education section of babypips.com and learn how to trade Forex. There's a whole course here. Take you a few days to a week or two to actually go through the course. But it's absolutely free, and you can start learning the basics of trading, and it'll get into investing as well. But if it's a good place to learn terminology, and it's where I got my start, where I started learning. And I didn't have any mentors or anything. I just kind of randomly got to where I'm at today. And so why it took me so long is because I didn't have, well, part of it is I didn't listen, but another part was that they were kind of telling me the wrong things. Like I said, they were really into the rich dad, poor dad, and the other people's money and things like that. And I was still stuck in consumerism, so I didn't have a good base to work with. So that's why I always recommend Dave Ramsey as a base, and then branch out from there. But as far as learning terminology and basics of trading, this is a free school. It's really good. And from there, go to Sam Seiden, just type in Sam Seiden and go to the videos. And here's a supply and demand basics.
All right, great.
There's I think I've got a link. If I can find it. It's like 55. It collects all the Sam Seiden videos all together in one spot, and so you won't be able to understand these videos without a basic understanding of trading. So that's why I recommend the School of Pipsology at Baby Pips first, and then moving on to this I think is the best way to trade. Is and I've tried different ways, momentum trading, and I'll get into that too here shortly. But this is my personal favorite way to trade. It just makes the most sense to me, and you'll see how I learned to draw my zones and where I'm looking for where the market is going to reverse. It doesn't mean it has to reverse there. It means that the probabilities are pretty high that it's going to reverse there. And so when you start thinking in terms of probabilities opposed to, black and white, it has to do this, it has to do that, why didn't it do this? There's a bigger chance that it's going to happen there than not. That doesn't mean that it's always going to happen, but it's a bigger chance, and then over time you win because you've got an edge. You've got a statistical edge. And this is, I think, is the best way to do it. There's others, but this is the best, in my opinion. Moving on from here, once you understand that, then you have to get money management and psychology down. You start trading this way, and Sam doesn't go into this too much, but I know a couple places that do. I'm going to show you where those are. The first one would be, what's the name of it? No nonsense. Now, I don't like the way this guy trades. this is just my opinion. This is not fact. But I go to his YouTube channel, No Nonsense Forex. Go to the YouTube channel.
This is the No
Go to the playlists. These are the different playlists. I've listened to all of these several times over, and I've gone into the Discord forum. I've done the back testing and stuff like that. I don't know. They're kind of dicks in that forum. I don't really particularly like it. And like I said, I don't even really trade this way. But I went in ahead and learned about the way he trades, and I got really in deep into it because there's a lot of good gems in here that are just we go with the spot metals and other markets is really good. The trading psychology is really good, and probably he does the best explanation of money management. This is worth its weight in gold right here, the money management part. Now, if you want to learn, what he thinks about indicators, he kind of poo-poos on a bunch of stuff, but he doesn't really either he doesn't know or he doesn't care how to actually use it and use some of the indicators that he shits on. If you basically, he uses a very simplified strategy, and then he spreads it out over all the different markets, gets a small statistical edge, and over time he generates returns that are conservative, very, very conservative. I found that when I spread them out, I lose focus and I don't do well. But if I stay focused and find those asymmetric opportunities, I do extremely well. So that's just my style. This is his style. But I would definitely give this a look. The Forex money management. This is worth its weight in gold. This is gives you a really good explanation. He does the best job at money management explanation, and even if you just flip a coin and do money management, you'll win at trading. Even just by flipping a coin, if your money management is on excellent, then cut your losses and let your profits run. You'll make money in this. He does an okay job with psychology, and I think he just put out a book. I haven't read the book, but I think there's better out there at psychology, but he does a pretty good job of that as well. But these two playlists are probably really good, and this one's okay. The spot metals and other markets does an okay job. Some of his longer term stuff, I picked up some pretty good gems and tidbits out of here. But if you want to go in and go all deep and try to, his strategy, basically it's a modified Ichimoku strategy with the cloud, and it's a modified version of that. I think that's how he got his start. I actually think I've run into him. We started trading about the same time, and like I say, he's got a better speaking voice, and and knows things that I don't, and as far as building a channel, and I don't know anything about that kind of stuff. And like I said, he's done pretty well for himself, so I can't fault him for that. And but I would definitely check out the money management playlist. These three right here, I think that there are better trading strategies out there, but you can take a look at them and see if it might be a better fit for you. That you might. I just found for myself that I lose money when I used his strategy. I would lose money, and I don't like losing money. So But that doesn't mean that it doesn't work. It just means that that strategy doesn't fit my lifestyle and my strengths. So, but I definitely, I can't emphasize this enough. This playlist is a must watch playlist. And then this one, yeah, it's all right. There's better ones though. Moving on. Crown's Crypto Cave. Well, I don't know. I never knew Crown until I got into cryptocurrencies, and he actually I first started getting into cryptocurrencies, and I was trying to find like correlations. And I did a video a while back on correlation of the what was it? The Nasdaq, or I think it was the S&P 500, and the Bitcoin, and I didn't have the right charts, and so I kind of misinterpreted things, and he corrected me on that, and then he actually went into a long explanation about what how the markets are still correlated. Because at that time when I got in, everybody was talking about Bitcoin was going to decouple from the rest of the market, and he's like, no, and he jumped on my case, and I was like, okay, well, let's see what this guy. And at first I didn't like him, but after a while he kind of grew on me, and so I went and found out his background and stuff, and I realized, hey, this is a pretty smart fucker. I better listen to him. So I went to Crown's Crypto Cave, and I like, some of his channels or playlists, maybe playlists. Yeah, here we go. Some of the, you'll find that he's total opposite of no nonsense forex. And this guy, non-nonsense forex, he's like me. He's just some schlub that, worked his way up, found a strategy that works for him, and then made a really good channel. My channel's crap, so I know. I don't try to hide that fact. I don't know what I'm doing as far as developing a channel, but this guy here, they're the total opposites as far as technical analysis, and his strategy's better because he does incorporate Sam Seiden concepts with his trading boxes, and he's pretty precise, and he's pretty fucking accurate. And because he was a market maker, an options market maker, the guy knows his shit, and he's only telling like maybe a tenth in his daily videos of what he actually knows. I've seen him in some of his deeper conversations with people that actually know what they're doing, and he gets some pretty in-depth stuff, and I'm like, oh wow. So if there was one paid option that I would be comfortable doing, would be working, buying his programs. I'm not getting endorsed. I don't get paid for this. I'm just grateful that he came and straightened me out as far as like the decoupling thing with Bitcoin, and excuse me. So when I started following him, some of it, he's much better, I think, in the psychology series than No Nonsense. I think he does a better job at explaining it. I also think his technical analysis is better. Excuse me. And then I also, he has an options trading course that, being a market maker and being in the market since he was 12 years old, I think the guy knows what he's talking about. He's kind of a weirdo, kind of a little bit of a pervert, but but definitely, if you get into some really deep conversations in some of his interviews, I was like, whoa, this guy really knows what he's talking about. I mean, if you go on to his daily broadcasts, it looks like gobbledygook at first until you understand what he's. And basically, what I look at, price action, he develops the same thing through looking at the RSI and stochastics. He's basically looking at price action through the lens of RSI and stochastics. And it's not, this line crosses this line like how no nonsense forex does it. He's actually analyzing like Sam Seiden does, but he uses price analysis through the lens of stochastics and RSI and the volatility and things like that. Once you understand how he works, he's like, the guy's hitting 70-80% on it, and you, with that kind of an edge, you can't lose. You just can't lose. I mean, well, you can lose, but in the long run, you can't lose. The guy's got just a huge edge, and being that it's been his whole life since he was 12 years old. I mean, I'd love to pick his brain sometime, but he is kind of a pervert, so you have to watch out for that. So, but he's cool as hell. I enjoy it. I listen to him daily, but I would definitely. Trading psychology series and technical analysis, trading strategies, new to technical analysis, all this free stuff. I would go through all of it, and then if you want to become a professional trader full time, I would definitely take his course. I have no question that this guy knows what the fuck he's talking about, compared to some other people, that are just schlubs out there schlepping, bullshit. Some technical analysis that you could learn from baby pips right here. Charging $5,000 to learn baby pips. That's fucking outrageous. That's just insane. And even if you're brand new, he has a neophyte program that tells you, it's basically baby pips. But he puts that money, if you want to go all in, he puts that money that you paid for that course towards the technical analysis or the options trading. I haven't done it myself, so I can't confirm nor deny whether it's good or not. But I did, just following this guy for the past few months, probably I've been following him maybe close to a year now at this point. I have no question this guy is one of the best traders out there. And so I'd highly recommend it. So that's a progression of trading and then going into investing. And then once you reach that level, it'll go start this series here. Once you understand what, because if you don't know what you're doing and you try to follow Crown and you're brand new, you will get totally lost if you don't know what the hell you're doing. But then once you understand, if you understand Crown, then you're ready for this. It's George Gammon's YouTube videos. Now this is more investing and macro trading, learning about macroeconomics. Like I said, this is some really deep, heavy stuff, and learning about the mechanics and the plumbing of how macroeconomics works. And I think George, with his whiteboard stuff particularly, does the best job of explaining how the mechanics of macroeconomics, and then his interviews with some of these top minds in economics. There's nobody better out there. He's just got this inquiring mind and this ability to break down complex the complex plumbing of economics into the simplest terms, and puts it on the whiteboard and does a really good job of explaining it. But if you don't know the basics, if you haven't gone through any of this first, you won't understand this. You'll be totally lost. You'll just shut down, tune out. So it's a progression. It's like it's a learning process, and it took me 10 years. Here I'm presenting it to you, and you could probably get this figured out within a year or two. So you're getting, at least a bachelor's degree, if not a PhD, a master's degree in economics, just from going through this course. What I've presented here, and being able to progress from one level to the next. That's the hard part, and that's I just meandered in the woods forever and came out the other side, and now I'm showing you where the best places are to learn these things. So if you're a noob and you want to start learning about trading and economics, start here. Sam Seaton, No Nonsense, Crowns, Crypto Cave, then George Gammon. That's the order that you should learn it in. So that's about all I have for this. I'm gonna shut off now. Let me just look and see if there's anybody came for any questions. Nope. Alright, well, I'm gonna shut down.